Hey, Thursday. What's up, everybody? Thursday morning. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Let's take a look at today's market moves as we are seeing some big movers this morning, and it's all led by Facebook. Facebook had some after-hours earnings that really made the market not happy, and so we're seeing the NASDAQ down this morning about 2%. The S&P's down about 1%, and so let's talk about what that looks like for today's trading. Real quick, if you're new to the channel, do me a favor. Make sure you hit that like button. It means a lot. Computer knows people are actually paying attention. So hit that like button. Leave a comment section down below. Just say good morning. Just give me a comment. That's all I ask. All right, let's get started. All right, S&P. In the S&P, we're down about 50 points this morning. And really, I before I get into any of this, I'm actually going to pull up Facebook. So Facebook had after hours earnings, and the earnings came in 367. Guidance, I guess, was not what they expected. And so if you look at it right now, it looks like we are going to open up today at 253. So we're in pre-market trading at about 253 this morning. Now, what's significant about opening up at 253? Well, opening up at 253 puts us right at this prior area of support. So remembering that Facebook is a major part of our overall NASDAQ. If I pull up the NASDAQ 100, Facebook is a pretty big component, although a smaller component than a lot of them. It's, as of yesterday, it was $323 a share. Today we're going to open up at 253. This being such a big component, it's really going to take a heck of a hit. And so we're going to open up down here at this 253 area, which actually you might get a little bounce right at the open. I think that there's a good chance you get a bounce right at the open. A bit of a buying frenzy, I think, could happen, and we could see price rally up very early in the day. But certainly, I don't think this is one that most investors should be playing with today. You're probably going to see a pretty big, not probably, you're going to see a pretty big gap down at the open, but it is holding pretty strong at the area where we had prior support down here, from earlier last year. So it's essentially going back to where it was a year ago today. If you think about it, right, this is a 1-year daily chart, and a year ago today we were at 264. So I wouldn't be surprised to see us gap down this morning and then trade up very early in pre-morning trading. But that is really what's leading our S&P and our NASDAQ markets to the downside, is some of the after hours trading on those markets. So now did get a bit of a reversal candlestick yesterday. So this is a pretty strong reversal candle. This is a shooting star candlestick, I guess this would be. I like to call that a kind of a sword doji. I think about like a sword that somebody's holding up. There's the hilt, and there's the blade, and down here's the handle. But either way, we rallied up and then closed lower than where we started the day on the S&P, which is short-term bearish price action. So we did have a little bit of a confirmation short area up here. Don't know that it made it far enough in for that confirmation supply area, and really gave us a really strong entry in there. Although you may have taken that as a short, but that was our target on the breakout, and that's exactly where we got to. Now we do still have an area of demand right here where we could see a bit of a reversal. This was the origin of the breakout from the other day. Now, the downside of this would be what we call the kiss of death, right? Here, this basing before a level. And so while I like this area, I don't like the basing in front of the level. So this has to be dead to me. I can't use this if I've got basing in front of the level. Just looking at the pure 15-minute chart, even if you wanted to go on a smaller scale and take the 15-minute level, you're still hard pressed to even get a 2-to-1 reward to risk out of that trade. I wouldn't be surprised, like I said, to see Facebook trade up early in early morning trading, and maybe a little reversal exists up here. For those of you that are looking kind of at a 2-to-1 smaller time frame entry point. Now, the NASDAQ Oops, let me go back and show that again in case anybody missed that. Right up there, 43, 45.36 by 45.41, which is formed at a pretty decent time of the day, and it's the origin of this move down right through here. Now, certainly, by the way, there's this wick over wick area, but I don't think that we're going to make it back up there today as well. All right. Next, the NASDAQ. So in the NQ did not make it up to our confirmation short area and then just sold off, cut through the demand areas below us like a proverbial knife through butter. And it didn't really have the strongest of days yesterday before the Facebook earnings. So the Facebook earnings really were they were icing on the cake, if you will. And so, we did get a reversal back to here, not really giving us a clean entry. So all of the levels that we had marked, they've all got to go, right? It's just we're just clearing it out. I will say that we are sitting just above a potential breakdown point. So if we break below 17, below the this low here, this area we're basing in front of it here, if we continue to break down, I think there's room to roam all the way down to 14,470. So this could be a heck of a day. This could be a bloody day for the Nasdaq overall. So just keep that in mind. I would look at this for a bit of a breakdown. If you look at this on a daily chart, we are seeing a bit of reversal. And we talked about the fact that we were at about a 61.8 retracement of the daily level. And that was the level that I did want to pay attention to, was the 61.8 retracement on that daily level. And that was, we looked at it in the S&P, but we came dead nuts on to the 61.8 retracement yesterday before then starting the reversal. So there are enough people that use that level that it definitely holds some weight and some validity. Okay, so I would look for small time frame shorts today. We're still technically in a big picture uptrend, so your small time frame shorts, the breakdown trade is, I think, probably the best way to go. If you're doing a short, you never can discount the Russell. We hit a 15-minute demand area. Actually got a pretty good move away from it yesterday, and now we are sitting at the bottom of what was that zone. And so since we're sitting at the bottom of what was that zone, we would look at that for a potential breakdown for price to trade down to this next area. So you've got about 10 points worth of price action here if we get below the Globex low, because we don't really have what I would consider a trap area to stop us from price falling down a bit lower. Let me take a look real quick at our crude oil markets. Crude oil markets, we've been talking about the fact that we were kind of humming along sideways. We got a little poke above yesterday to give us the potential for a breakout, and then it just kind of didn't do anything. Came back into a little demand area, got a little bounce out of there, and so we're still hovering in this range. There's just not a lot happening in here overall in this range, and so I still think that the better chances would be to pop up into this $90 area, but we came close to it and didn't quite get in. I still think that's an area that's we have a better chance of hitting. Was a little bit surprised in yesterday's price action popping above this area, only to come immediately right back down. But them's is the breaks, as they say. I don't know who they are, and I don't know why they say that, but they do. So looking at some of the demand levels below me as we might continue to fall a little bit, you'd have to still get below 86.19 before really a good breakdown short, and then you've got this little wick over wick in here that is going to act as a bit of a stall point. If you are a small time frame trader, you're looking for kind of intraday opportunities, I really do think this noisy cricket level here is a pretty good setup. Remember, I jokingly refer to a noisy cricket as a wick over wick area on a 15-minute chart. So that would be our noisy cricket area right up in there. Gold, we are sitting below our area of supply. We came close to it without getting in, so that needs to convert to a confirmation entry. Still valid, but it's got to be a confirmation entry. since we came close without giving us an entry. And then looking at new levels to add, just nothing in here is exciting me. I mean, I'm not lighting myself on fire to get into some of these trades. A lot more confirmation such. All right, let's take a look real quick at our crypto markets. We talked yesterday about Bitcoin and Ethereum, and Bitcoin needed to get above here before we get an entry, and it's still, we're still below it. And so now we're kind of range bound in Bitcoin, so really nothing to look at for today. And then Ether, we are coming down to the area of demand. Our 4-hour direction tells us that we've got a higher swing high. And I don't really officially have a true, swing low after this swing high that's occurred. So let's see if this area of demand that we're sitting in right now holds. If this area of demand holds, your first target is really this area right here, because you do have a nice little reversal trade there. So if you make it up to here, take some money off the table, walk away happy with a little smile on your face. Looking real quick at the euro, because we've been taking a look at the euro every morning. And the euro yesterday, we rallied up. We do have this area of demand down here. We've come close to this level. We're getting a bit of a bounce off of it as of now. We based here in front of the level, thus making it a little bit less probable. Looking at this on the 4-hour, we have come back. We got through this little pivot. We got through this little pivot. So we were able to get above some of these pivot highs that existed over to our left. And so that's actually a sign of strength. And so, this hourly pullback level, if you're not in it, I wouldn't get in it now. I would wait for price to rally above maybe some of these areas in here. I think we'll get a little bit of bounce off of there. And if we fall through that, you don't have a quality area of demand for a while. So then look for a breakdown for price to drop. I mean, I like this demand area here. The problem is that we've already tested it with this red candle that exists right there. All right, well, that's all I have for today, everybody. I hope you guys have a phenomenal trading day. If you have any questions, as always, let me know. Support at tradersarmy.com. Until tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.